Welcome back to another episode of Stocks with BK. I'm BK, and disclaimer as always, investing in the stock market has risk. I'm not a financial advisor. You should totally talk to one. And also, if you invest in the stock market, don't invest any money you can't afford to lose because the stock market has risk and you could totally lose it all. And that's why this is an educational video. And these videos are all educational. And today we're talking about PE ratio, something that for some reason day traders and people on YouTube tend to hate, and they're like, no, it doesn't matter. Well, it does matter. The stock market is back to normal pretty much these days, and for those of us that really care about that, it's been working out great because we understand value, and that's why PE matters, because you can get on some great companies when they're undervalued, not overvalued. And we're going to look at examples of both. And then, of course, the channel's just starting out. And if you're watching one of these videos, my day-to-day videos are going to be on this portfolio that I'm managing. I've got another one. This is going to be the one for you all to follow along, where I'm going to put $1,000 in at the beginning of each month and show you how I actually invest. It's meant to be educational so people can see the value of investing long term. So let's jump right into PE ratio and let's pull up a company, but let's do the PE first. So it's share price over earnings per share equals the price to earnings ratio. So PE ratios are the amount of actual earnings, like per share, so that each share of stock, companies can issue stock. It's a great way to raise money. And if a company does that while you're in it, it can hurt you. Some great examples have been happening of that lately, where some people have been getting scared off, MP, other stocks, but price to earning term shares. So some companies have a lot of shares, like a lot of float, a lot of shares out there available. Some companies buy back their shares. But PE is something you should take into account, and some people would say it doesn't matter, and here is why, and they are definitely the Tesla argument, and I don't even disagree with them when it comes to Tesla. Okay, let's look at Tesla, for example. So if you go to Tesla, and I'm using SoFi for this account, and you can pull up their chart, and we can look at their stock price over the year, 5 years, and if we click 5 years, of course, you're going to be like, oh my gosh, should have bought it back here, would be making big money. Absolutely. So if you use SoFi for an example, you can use Google or whatever to look up a stock, and you should always look up a company, use their website if you don't know what they do. I know what Tesla does, and you probably do too. So on the right over here, we got the PE ratio. We also got the volume, but let's do with PE today. So 1,052. As a rule of thumb, you can look up the average PE ratio of companies in the Dow and the NASDAQ and everything. And the rules of thumb are this: under 20 is considered value. Like that's good. Like if you have earnings, to have a PE ratio, you have to have earnings of some kind. That means you have to be making money. If you don't have a PE ratio, that's because the company might not be making money. You need to be careful with those stocks. You can speculate some, but I would not have a portfolio of companies that have no PE ratio because they have no earnings yet. That is asking to get burned. Well, Tesla clearly is trading way higher than their PE ratio. The cutoff most people say is 40. Above 40 PE is considered dangerous, overextended, whatever you want to say. But we are in a new world where this is not just based on PE. It's the PE of a company that one day could be doing so many other things in the tech world, and the EV market is growing like crazy. So is that overvalued? Tesla and some companies are going to be way overextended, but as a general rule, under 20 is considered like that's close. That's a deal. Some people would say that's cheap, and Ford and GM are some we're going to look at, and let's pull those up right now. Where if you want to play the EV world and you want to compare some stocks, this is trading at $57 and has a PE ratio of 1337. That means that it is trading at only 13 times earnings, and they're both in the same business. Of course, Tesla is not just an EV or car company, so I know before you come at me in the comments, like, I agree with you, Tesla still might be worth it. So PE matters, and it should be taken into account for at least some of your portfolio, maybe even half of your portfolio. It needs to be things that are value, like they've not run so high. Now, let's look at one where you might be like, oh, that kind of surprises me, is Apple. Apple's PE ratio is 33. It's not over 40, and it is a little high. But if we know anything about Apple, we know that if you look at Apple's charts and you look at their prices, there was never a bad time to buy Apple in the last 5 years or the last 20 years. Apple has been dependable. So yeah, it's at 33, but I wouldn't bet against Apple. So PE is price to earnings, and that's one of those things that you've got to consider when you look at anything. So I have a stock I really like, DraftKings, And look right here. As of now, we don't have any PE on this site. You might be able to find it on another site. But if you buy a stock like DraftKings, you're buying it on the future of the company, like that gambling is getting legalized in 21 more states next year, or whatever it might be. So PE ratio, take it into account. It's not everything, but it's something you should be aware of. Why is it not listed? Do they not have earnings? They have earnings. Or are they still not breaking even? Like they're making money, but they're not really making money? These are all things you should take into account. And with some of your companies, you need to at least have good value on PE, but with all of them, know why the PE is the way it is. Why is it high? Why is it low? Why is it not listed? Anyway, I'm BK, and this video was on PE ratio, but if you want to see more stuff, check out my other videos, and thanks for watching. Be sure to subscribe.